The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Well, it's a new month, would you believe? And my goodness me, didn't the markets rally in the last month despite everything that was thrown at them. Welcome to Squawk Box Europe. Ben Boulos joins me, Steve Sedgwick, and these are your headlines. The ECB and the Bank of England keeping rates on hold, but warned they are prepared to hike if inflation pressures from the Iran war build.
We also debated at length and in depth a decision to possibly hike.
If we had to do it in the future, and as I would say about any interest rate rise, it's because we have to get inflation back to its target, and we think that's the best way to do it.
The S&P 500 and Nasdaq round off their best months since 2020 as investors look beyond the Middle East and bet on big tech's AI build-out. While on the earnings front, Apple moves higher in extended trade after posting a top and bottom line beat. Elsewhere, oil eases back after hitting a 4-year high on Thursday, but still trading well above $100 a barrel, with Donald Trump vowing to maintain his naval blockade on Iran.
There are so many bad things going on in the world. There are at least two major wars that CNBC and every other news channel talk about on a daily basis, that fill your socials as well, that are full of doom and gloom as well. There are concerns about the ramifications from that and what that means for the cost of money, what that means for technology rollout and how profitable that will be, and about whether AI and valuations are too much. And yet, what have we seen over the last few weeks? We've seen technology rally, but we've seen a lot of other sectors rally as well, certainly stateside as well. If you want to see the biggest performing indices, don't just look at the Nasdaq, look at the Russell 2K, look at the Dow Transports. And why are they rallying? Are they ignoring all those negatives, those storm clouds building? Or are they saying, actually, regardless of all those, these companies are rather good at what they do. These companies are actually rather adept at making money in the most troubling of circumstances. We don't even talk about the tariff effect anymore. But even outside of the United States, companies are still knocking the ball out of the park, despite that concern. Let me give you an example. There is a British bank that has just reported and has just said that 2026 now expect income ex notable item to be at the top end of our previous guidance. The previous guidance was up as high as 17.6 billion. I'm talking about NatWest as well. So yes, over the 1 year, it's up 23%, but it's wobbled 10%. And look, I'm not here to tell you to buy NatWest. I'm not here to tell you to sell NatWest. But when you've got a bank trading on 7 times forward, just over 1 times on a price to book, which this one is, that is saying we're now going to be at the top end of our previous guidance as well, and also turning in a total income of 4.4 billion pounds sterling, operating profit of 2 billion pounds as well. It looks really, really interesting. Now, look, they have said first quarter impairment charge, including multiple economic scenarios update of 140 million pounds. But I think a lot of this is within range. Their capital ratio, I don't even bother telling you that these days. You assume it's good and it's okay. It's at 14.3. So I don't know whether you should buy this market. I don't know if you should sell this market. All I'm saying to you is companies on both sides of the Atlantic keep knocking the ball out of the park, including this mega company that young Benjamin might be talking about next. How are you?
I'm well, thank you. Yeah, very good. It's been a busy week, hasn't it? And it's certainly, well, for us, but also for all those earnings. And talking of which, Apple shares rose in extended trade after the company issued a better than expected forecast for the current period and posted a top and bottom line beat in the second quarter. The tech giant said it expected Q3 revenue to rise between 14 and 17% against expectations for less than 10%. The outgoing CEO, Tim Cook, said the iPhone 17 is now its most popular model, as sales surged by more than a fifth on the year. So let's have a look at how things are playing out on the markets. And 2 new intraday and closing highs for the S&P 500 and for the Nasdaq. As Steve was saying, the tech sector has really been sort of powering a lot of the rally that we've seen in the markets, pushing those two. Look, the S&P closing above the 7,200 mark for the first time. Gains across the board, all of the US markets closing in the green. So let's sort of take a step back and zoom out, see how that fits into the bigger picture, and actually look at that. Markets up on the month, and the two of them, the S&P, the Nasdaq, in fact the Russell 2K as well, it's not on there, but they've all had their best month. April was their best month since 2020. So the markets really powering ahead. That despite the continued high price of oil, we've seen it hovering around $100 a barrel for the last couple of weeks. And then earlier this week, it hit an intraday high of 126 for Brent crude. Markets seeming to shrug that off, looking to AI in many ways and the gains that it could bring, fueling some of the optimism there in US equities. We can have a look at some of the specific stocks of tech shares, and you can see there the effects that we're talking about. We've had so many earnings and updates from 5 of the Mag 7 companies. We've had Alphabet, Amazon, Apple, Meta, and Microsoft, and in some cases doubling down on their hyperscaler AI build-out, the spending on data centers, and what they anticipate to be relentless demand for artificial intelligence services. So that's looking back. Let's look forward now, and this is what's being called for the trading day on Wall Street on Friday. Look at that, looking to build on the gains of yesterday, some of those all-time highs, and also looking to build on what has been a bumper of a month.
John Plassard, partner and head of investment strategy at Cité Gestion, joins us now. John, sometimes I'm bemused by these markets, sometimes they make complete sense to me as well. What do you make of these staggering moves to the upside that we've seen primarily on US equities, but to a certain extent Europe as well? Even the DAX was up 7% last month as well, given the extraordinary economic and geopolitical backdrop. Good morning, sir.
Morning, Steve. So I look at the glass half full. And there is something that you didn't mention before. You know, if you look at growth, the macro driver, if you look at the American growth for the first quarter is up plus 2%. And we had jobless claims at their lowest level since 1969. We had Visa, for example, and MasterCard telling us that the Americans are still spending, still consuming, even if the price of the gallon is over $4. So this is very important. This is one fact that we should not forget. Of course, there are stress in the future, and Mr. Powell just remind us that could be something on the unemployment rate in the coming quarters. But, if I look at the US plus 2% in growth, China plus 5% first quarter, I think things are doing well for the moment. And I'm not blind. I can see what is happening in the Middle East. But you just mentioned it before, AI. The demand is not the issue. Capacity is the problem. We have limited infrastructure and compute power that are becoming the main bottleneck, reinforcing the theme of massive, strong investment in AI. Even the CFO of OpenAI mentioned it last evening, So I really think that for the moment, the market is really anticipating that in the next 6 to 12 months, things will go better.
Okay. What about Europe and European equities? A lot of those drivers that you just referred to, the strong growth figures, the AI investment, the technological innovation, a lot of that is not bypassing Europe, but is almost kind of... it's magnified in the United States and elsewhere, and in Europe, it's more tepid. We have other drivers that are perhaps more complicated on this side of the Atlantic.
Yeah, agree with you, but you were mentioning the DAX before, but more than 60% of the component are international companies. So they are not really related to Germany. Same thing with France, with the CAC 40, because they have, of course, Total Energy, and they had some luxury in those 40 stocks. But coming back to your question, what do I think about Europe? I mean, I have the same, at the beginning of every year, I'm very hopeful that it will go better, that growth will be over 1%, but you just saw that the Bundesbank, they just cut their expectation of growth from 1 to 0.5% this year. The first quarter in France were at 0% of growth. So as every, let's say, every second quarter of the new year, I'm always disappointed. And let's be honest, when I hear Mrs. Lagarde yesterday, I don't think she has and she's much more brilliant than me, but I don't think she has a vision above 6 to 12 months. And this is what we need, even if it's false. And I like much more, you know, the dot plot in the US, because they give you a sense of what could happen.
John, I just want to get your thoughts on something, because to my mind, I mean, with oil hitting that intraday highest it's been for 4 years of $126 a barrel, and it's fallen back since, and maybe that has added to some optimism in the equities space as well. But in the last 24 hours, Donald Trump vowed to continue with the blockade, the naval blockade of Iran's ports. The Secretary of War, Pete Hegseth, told Congress that the ceasefire with Iran pauses the deadline for Trump to go and get approval from Congress to continue the war in Iran. There's a 60-day limit. This suggests that we end the week with even less clarity on how this ends and when this ends and when oil starts flowing through the Strait of Hormuz. Do you think that the price we're seeing for oil and the response we've seen in equities properly reflects that increased uncertainty as we sit here on Friday?
No, but I think that the investor now understand the game, if I can say that, of Mr. Trump, that is putting pressure. You know, we have two issues here. On the Iran side, we have a key concern that is emerging, that the storage, you know, their storage capacity could soon reach its limit. So that is raising the prospect for a solution, kind of a solution. And we know that, and you've discussed about that so many times, at the end of this year in the US, we'll have the midterms, and the price of the gallon is over $4. So I think it's more like a pressure game. This is Mr. Trump is trying to pressure Iran and telling them that he could stay there for as long as he wishes. But I don't think it's the case, because on one side there is a political issue, and the other side there is a storage issue, and this will bring some, a solution in the coming weeks. That's my view.
And then I just want to pick up something in your note that you very helpfully sent us ahead of our conversation here this morning. We are obviously very drawn to the US markets and the highs that they're hitting, but you point out that actually, very quietly, emerging markets are also hitting new records. Just talk us through that, what you think is driving that and how robust that rally is.
Yeah, because, you know, if you look at the emerging market, you will focus on, of course, on Japan, but this is another animal, if I can say that, but China and South Korea, and the performance is driving by, artificial intelligence, of course, and we see that there is a contrast with those weak in energy importing economies that are impacted. But on the other side, if you look at their stock market, most of the big names are technology stocks. And you saw how South Korea is moving since the beginning of the April month. And this is the same with China. So I think there is a disruption, and in fact, there is a mixed signal, but at the end of the day, it is still AI that is winning.
Jean, when do we get to the level where actually your glass half full, I think it's slightly more than half full actually, I think it's nearly near the brim, when you think actually I can't drink from this cup anymore because it's just overflowing, and actually I need to be a little bit more careful, because these valuations on both sides of the Atlantic, they're looking pretty full.
Yeah, agree. I will say that, in fact, actually, it's not valuation that matters. It's more the momentum, and we saw that in April. And let's be clear, Steve, if I hear and if I look at the message from the company that just reported, even Meta that lost 10% yesterday, but the message is quite positive, and it's quite positive on the future. And look what Apple just released. We thought that the iPhone was an old thing, if I can say, but it's still the key pillar of the results with the services. So I would say I will look at this glass half empty when, if, let's say, we stay in the same situation in the Strait of Hormuz for one more month. Because I really think, and we've discussed about that, Steve, I really think that the problem will not come from the high energy price, but it will come from a policy mistake. Because listening to the ECB yesterday, and even the Fed, we are still in the kind of discussion they had in 2022, talking about transitory inflation. And at some point you will be behind the curve and you will run, if I can say that, run after inflation. And we know we've seen some here and there inflation picking up more than 3%. And we see that. So in my view, if we stay like that, to be very clear, if we stay like that for one more month, I really think we have an issue. If the central banks don't hike their rates, and on the other side, if the level of the barrel stays at where we are now, close to $100.
Okay. John, thank you very much. John Plassard, partner, head of investment strategy at Cité Gestion. Thanks for joining us. Still to come on the show, the Bank of England governor speaks to CNBC as traders eye possible rate hikes ahead. Plus, President Trump gives one UK sector some tariff relief after the King's state visit. We'll tell you which one it is. And more on Apple's results with FDM CCS Insight Chief Analyst Ben Wood. That conversation is coming up at 9 o'clock London time. Don't go away.
I'm Steve Sedgwick from CNBC, and in my new podcast, Executive Decisions, I ask powerful leaders about their decisions that changed everything.
I'm not frightened of making tough decisions, and I think leadership can be very lonely.
Business leaders should not stay quiet in a world which is super complex.
It is absolutely fine to also change your mind.
Tough calls, personal crossroads. These are the stories that we can all learn from. It's Executive Decisions from CNBC. Get it wherever you get your podcasts. Come on, though, really, what did we expect them to do? I mean, what can they do? We just want to wait for the end of the world. That's what we just heard from Jean Plassard, isn't it? Anyway, I suppose what they can say and what they're signalling perhaps is where we should read more into it. Anyway, the ECB and Bank of England policymakers signal the potential for rate hikes ahead. I mean, yeah, as they grapple with the impact of rising energy costs triggered by war in Iran. Don't forget, also triggered by the cost of energy effects from the war in Ukraine as well. Both central banks held rates as expected as they look for clarity on the outlook. Good luck with that. Traders now pricing in a 75% chance the ECB hikes in June and a more than 50% chance that the Bank of England does the same, according to LSEG data.
Who is it?
ECB, easy for me to say, otherwise known as the ECB President, Christine Lagarde, suggested that policymakers would consider a hike in June and said a move higher was even discussed at this meeting.
We also debated at length and in depth a decision to possibly hike. So that was debated amongst all governors. And I'm sure that you will meet some governors who will argue both sides, or maybe one side, of both proposals. So it was really a deeply discussed monetary policy stance. of which the outcome was a unanimous decision to leave the 3 interest rates unchanged. And I'm saying that it's an informed decision based on insufficient information. 6 weeks will be the right time to assess the development, to understand in particular the outcome, possibly, of the conflict, or if there is no outcome, that in and of itself will be informative, in order to make an informed decision on verified and revisited information.
There you go. I told you that was the ECB's Lagarde. Eventually. Whittaker spoke to the Bank of England Governor Andrew Bailey about the outlook for rates and whether recent market tightening is helping to dampen inflation.
Let's go back to the starting point, back sort of end of February. The market was pricing us to cut interest rates somewhere not far off twice, 225s this year. And that was pretty reasonable because, I'd said in previous, when we were here, a quarter ago, I'd said I thought that was reasonable and not unlikely in my view. So that gives us a starting point with interest rates at a lower point looking forwards. Well, that's come out, as it were, and that seems to me reasonable. But that gives scope for some tightening in terms of what's expected before we have to actually put today's interest rate up, as it were. And that's happened, of course. Now, you made the point that I commented at one point the markets were getting ahead of themselves, because at that point, and this was going back sort of sometime, I think it was early March sometime, there was a point when they were expecting 4 or 5 increases this year, and I said, hang on a minute, we've had this adjustment, which was obviously a challenging adjustment for markets to make because they were quite heavily positioned for us to cut rates, reasonably so. Sadly, events took over and that's come out, but I think we then went too far the other way.
So is there a situation when we don't get any rate hikes?
Well, we presented the scenarios today, and there's a range of territory, as it were, covered by those scenarios, in which I think that what we've seen already, which is the taking out of the interest rate cuts that were expected, will actually accommodate seeing off the shock. That's the benign end of things. If we get the whole thing playing out probably over a shorter time frame, the second round effects as it passes through into general inflation turn out to be smaller because the state of the economy is softer. There's a range of outcomes which that accommodates, and then there's another range, I'm afraid, where we would have to put interest rates up.
But for the average person or household, how do you justify raising rates when they're facing, a triple whammy right now in terms of their, the weaker economic growth, the higher costs for inflation, and then also if you raise interest rates, the mortgage costs?
Well, obviously, let me start by saying we've taken a very deliberate and intentional decision today not to raise rates. If we had to do it in the future, and as I would say about any interest rate rise, it's because we have to get inflation back to its target, and we think that's the best way to do it. And I would add that why do we have to get inflation back to target? It's not just it's the target, it is that persistent inflation is damaging for everybody. It's damaging for all households. And so, it is our job to get us back to price stability defined as a 2% target, and that is important.
And for more of Whittaker's excellent interview with the Bank of England Governor, check out CNBC.com. Right.
US President Donald Trump announced he will remove tariffs on Scotch whisky in honour of the UK's King and Queen. The move follows a state visit by King Charles to the US, during which the British monarch met the US President at the White House and delivered an address to Congress. Well, Tanya was speaking to the former US ambassador to the UK and joins us now. Tanya, I was just looking at this, and apparently a spokesperson for the palace said the King appreciates the President's thoughtfulness and will be raising a dram to it.
Absolutely, as will we. Look, a good result to come out of the visit. At least tariffs have been taken away from something. But of course, the King has been applauded for his warmth, his wit, his charm. And I spoke to Matthew Barson, who was the US ambassador here in the UK from 2013 to 2017, to ask what he thought about it.
I think the trip was a really big success. And I think it's really important as we talk about the special relationship, whenever big meetings like this happen, you often get people who either sort of parse how special was it? Was it more special in the past? That kind of thing. Or people making bold declarations or predictions of its death. And I think the most important word in special relationship is the second one, relationship. That's what we're talking about here. And just like personal ones, they run on trust, respect, and understanding. And I think those three really important things were increased from this visit.
What do you think it has been that has damaged it? Because really, between President Trump and Prime Minister Starmer, we've seen a breakdown of relations.
I think one of the big misunderstandings is that somehow we have done hard things because we are friends. The much more powerful truth, I think, is that we are friends because we have done hard things, including disagreeing with one another a lot in our history. So we shouldn't paper over disagreements and pretend it's not there. That's where all the potential energy of this relationship lives.
Well, the speeches that, of course, King Charles made to Congress and the state dinner were seen by some as more political than expected, referencing key issues like NATO, the role of NATO, international rules that have allowed trade and kept power in balance for 80 years. How do you think those speeches were received by Congress and by the president himself?
Well, I can't speculate as to what our president thought, but watching that address, by the way, just worth noting, it's kind of crazy that mentioning NATO or rules-based order would be controversial in either of our countries. So I just want to say that at the top. It was really wonderful as an American to watch that chamber. Normally in the last, 30 years, both parties, half will stand up and clap and half will sit on their hands. And what we all saw was all of these Democrats and Republicans rising at the same time, clapping to the same things. That's really powerful. That is a symbol of unity. That doesn't happen by accident.
Ambassador Matthew Barson there on the King's visit. All very positive. He's been very well received. And of course, in Congress, he united the Democrats and the Republicans. And they gave him 12 standing ovations, Steve. Just a couple more than you normally get.
Yeah, just a couple more than I would
when
get,
you
I'm
run
sure.
your marathon,
Look,
you get...
Well, yeah, absolutely. I was running very slowly. I thought he was excellent, of course, and I always thought he should go. I think he's a brilliant ambassador for the country as well. And it was incredibly witty as well. And I think... Actually, it just shows the value of really good wry humour in these quite difficult times as well. Love the back and forth about what language we would be speaking.
Yes, of course, the French.
Well, exactly. So, I mean...
And Macron came in and said to be very chic.
So first of all, you've got Trump saying Europe would all be speaking German if it wasn't for the Americans. And to be fair, he's probably right. But then, of course, the King... turned around and said, and if it wasn't for us, you'd be speaking French. To which, as you quite rightly say, Macron on X just replied, and it got 1 million clicks straight away. Macron replied, that would be chic. I have to say, you know what? There's some terrible things going on. There's great transatlantic angst about NATO, about trade relations, about Ukraine. But actually, a moment of levity that Macron, Trump, and King Charles all got on board.
Much needed at this time.
Yeah. And there's a lot of symbolism on the trips. I was just having a look at the New York Times coverage as well. Apparently it all rounded off with...
You only looked because Tanya said what the New York Times...
Well, yeah, exactly. No,
so
don't give the game away.
You're furiously looking.
Don't give the game away.
Take the credit, Steve. Come on.
I was going to tell her to look for herself. You're so compliant.
He was doing very well. He was doing his research. He was looking at...
OK, what did you, on your independent research, off your own back, find at the New York...
Full disclosure.
Ben says...
After being prompted by Tanya, what's the New York Times coverage like? I've gone and had a look. And actually, it was a very good idea to have a look because something I'd missed. They rounded the whole thing off with a block party at the British Embassy.
Yes.
Which is, everyone brings a different dish and you share the meal. But what does a royal couple bring to a block party? Asked the New York Times.
Quail.
No.
Caviar.
What was it, Ben?
So they
Kedgeree.
had coronation quiche, which is spinach, broad bean and tarragon, a Victoria sponge, that was an easy one, everyone's going to bring a Victoria sponge, and some honey from the couple's own royal hives. It's nice, isn't it? Nice touch. And also those little moments, they can seem quite
Did Trump go to the block party?
I think so, yeah. They had...
Did he get a Deliveroo at McDonald's again?
I haven't got that far through the article.
Ben, I don't think he was there. We'll have to double check on your next research.
Yeah,
deep. But I think they went themselves.
I just wonder, you have those lighter moments, those things. It was a choreographed photo op, wasn't it? But I wonder if those are the moments where those informal conversations happen. Is that where the King said to him, look, Scotch whiskey, have a think about it,
I don't think the King mentioned Scotch whiskey. There's no way Charles would get involved in trade negotiations.
Fair.
And that is a trade issue. I'm sorry, as much as...
Maybe he just had a little glass and just looked at him, gave him the look.
I very much doubt the Palace...
very clear of politics.
You know this better than I do. I very much doubt the Palace would have gone anywhere near any sector and any trade issue.
They wouldn't have.
Indeed.
I'm surprised you weren't invited.
Me too.
Marchioness Breyer of SW something.
Well, where was Lord Sedgwick? He should have been there. You were too busy, pounding
on
the
the
pavement
estate.
of the marathon.
Lovely, thank you. We'll see you a bit later on.
Yes, absolutely.
Super duper. Right, OK, let's have a look at the FTSE futures. But if Diageo is going to get a blip up from that, maybe not. 10,361 down, 0.17% is where the FTSE is called.